Welcome to the Gold and Silver Report. Today, December 4th, 2025, gold closed at $4,207.20 per ounce, up just slightly over $5 from yesterday's close. Silver backed off from its record high to close down at $57.05, off $1.37 per ounce. As usual, the headlines attempting to explain the current prices of gold and silver were mixed, but one stood out. Quote, Indian consumers can formally monetize their silver, changing the game for this precious metal, end quote. What this means is that soon, on April 1st, 2026, the Reserve Bank of India will allow citizens to formally use their silver holdings as collateral against credit obligations. Clearly, this will make the already popular metal even more desirable and potentially valuable. In the numismatic world, where silver and gold coins have long been a mainstay of business for both coin and bullion dealers, we're seeing an evaporation of collector premiums as the rise in intrinsic values have begun to exceed the normal collector values. We're also noticing some refiners discounting physical coins and related bullion well below spot because of their backlog in processing. In some cases, they paused buying metals completely. One dealer was offered 90% of spot for sterling silver, which is 92.5% pure. Another dealer was offered 90% below spot for non-pure silver, but was limited to only 1,000 ounces a week. Another dealer complained that they were having to wait 10 to 17 days to get paid. Now, this does not appear to be a widespread problem, but it indicates that the refiners are becoming severely strained and that the influx of gold and silver is larger than anyone expected. This will help to reduce the squeeze on physical silver that is keeping prices high, but it also means that no one wants to bear the market risk if it takes over 2 to 3 weeks to process metals. Nor can dealers afford to have their capital tied up for long periods. It's ironic that we hear about this great squeeze on physical silver, yet physical silver is discounted, sometimes severely, if it is not in its pure form. The key takeaway from this is that owning physical gold and silver may not be the best bet. Storage costs, transaction security, and shipping fees sure make ETFs look very attractive. Thanks for joining us today, and we hope to see you in future podcasts. Please consider helping us grow the channel by subscribing, leaving a like, and a comment.